Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first most bearish scenario where we are looking for an impulse to the downside over here after wave 1 and 2 are finished, and now we are on our way for the green 3 for much lower prices. In this particular scenario, this wave 2 over here retraced to the golden pocket taken from the high to the low of wave 1, which is a common target for a wave 2. Now after the high of this green wave 2, we then count a double 1-2 on the lower time frames, for this then being a wave 3 to the downside. The main question that we have to ask ourselves at the moment is if this move to the downside is going fast enough, and that's what I say over here. Is this move down too slow for a wave 3 of 3 of 3? And what I mean with that is that currently we are in a wave 3 of green over here to the downside after wave 2 is in. We are in a wave 3 of blue after the blue wave 2 is finished, and we are in a wave 3 of white over here after wave 2 is finished. So this should be a very incredibly impulsive move towards the downside. Big candles, high volume, very parabolic towards the downside. But at the moment, it is not yet as quick as I would like to see. So I really want price to pick up the pace, move to the downside, bigger candles and higher volume, else the probabilities for this scenario will become lower. Now the invalidation of this scenario is if price moves back towards the upside and hits the invalidation at about 28.3k. If we then go to the second bearish scenario over here, we have the same 1-2, so that remains the same. But then in this scenario, this move over here is a second wave 1 of a lower degree. So now we have a wave 1, 2, looking for another 1, 2, for then a bigger 3 towards the downside. Now important is that this second wave 1 and this second wave 2 is a lower degree 1 and 2 compared to the higher degree wave 1 and 2 in green. Now the lower the degree in Elliott waves, the usually shorter the waves, meaning shorter in price and shorter in time. However, this wave 1, the second wave 1 in blue, is already longer in time than the first wave 1 here to the downside. If you take a fib time from the high of 1 to the low of this 1 to the high of wave 2, then the 1-to-1 fib time is the vertical line that you see on the chart. So if price did something like this, it would be very valid and very nice for a second wave 1 to end over here. But now you can see price has crossed this 1-to-1, meaning this second wave 1 is a lot longer in time than the first one, lowering the probabilities. And if price moves to the downside over here and hits the 1-to-1 trend-based fib extension taken from the high to the low of 1 to the high of wave 2, then it also means that the blue one is going to be longer in price compared to the first wave 1, lowering the probabilities of a double 1-2 for eventually a bigger 3 to the downside. At the moment, the invalidation is above wave 2, and even though the probabilities are not great because of time, we can't yet completely disregard this particular scenario. In this scenario, a more bullish scenario, we are looking for an ABC. So in this more bullish scenario, yes, we do expect a bit of a move to the downside, but because we are looking at a corrective structure, a 535 ABC, you expect new highs to come to at least take this high over here at 28.6k. In this particular scenario, we are now working on a wave C, and most commonly a wave C takes more time to form than a wave A. So the fact that this move over here the high of this wave B is longer in time than the move of wave A is not particularly a problem in a wave C. Now currently price is bouncing on the 0.618 taken from the high to the low of A to the high of B, which is a rare target for a wave C, and also in a zigzag A, B, C, a 5, 3 and then a 5 wave structure, you really want the low of A to be taken. So this is a minimum target for wave C. The most common target for wave C is between the 1 and the 1.236, which is between 26.8k and 26.5k, and just above the 1-to-1 here we do have some additional support between 26.8, 26.9 and 27k. So in this particular scenario we are looking for a move to the downside where we really want to see a wave 4 formed before a move down, because if we are looking here for a 1-2, 1-2 and then a wave 3 to the downside, we definitely want to see a longer range than we have here at the moment to validate this as a wave 4 for then a 5 to the downside. Because if price is just going to do this like 1, 2, 1, 2, and then continue down in almost a straight line without a wave 4, probabilities for this scenario will be lower and the probabilities increase for this to be a wave 3. So in the more, let's say, bullish scenario where we're looking for an ABC, you're looking for a bit of a horizontal range before you reach the target area of C. So 1, 2, 1, 2, 3, then a bit of a 4, 5, 4, and then a wave 5. So 1, 2, 1, 2, 3, 4, 5, 4, 5, and then you want to end somewhere around this area. If we look at two very alternative scenarios that I think are important to explain for the sake of education as well, then this particular scenario has a low probability of playing out. In this scenario, we have a W, X, and a Y. W is then a three-wave structure in a zigzag, A, B, C, followed by a wave X, which by itself is a WXY, with a W over here zigzag, X being a flat, and Y being a flat as well, for then a three-wave structure to the downside in a wave Y. Now, because wave W is a zigzag, wave Y in a sideways double combo WXY scenario, wave Y is not allowed to also be a zigzag. Besides, counting a zigzag over here is incredibly difficult. This over here is a zigzag potentially for maybe then a flat in a wave Y, because if wave W is a zigzag, wave Y can be a flat or a triangle. So a potential flat could have been ABC, move to the upside, take the high over here, and then seeing a 5-wave move down. But that's not what we got. Wave Y can also be a triangle, but at the moment that doesn't make sense. So therefore this scenario does not look very probable. And if we look at a triangle over here where all the waves have to be zigzag, so wave A, B, C, D, and E all need to be zigzag structures, or at least part of the family of the zigzag, then the problem here is wave B as well as wave C. Wave A can be counted as a zigzag on the lower time frames, but in this wave B we have a problem, because we could potentially count this move up as a 5-wave structure over here, which then ends right there or even there. Doesn't even matter. The problem is this structure over here, because in a zigzag, we're looking for a 5-3 5-wave move. Now, first of all, Bybit wicked this low over here with this low, which is not allowed in a triangle as well. And second, if we look at a zigzag, you want to see a 5-3 5. So now imagine that Bybit didn't take this low. Like on my chart, this low is actually a little bit higher than A. So if we think about a 5-3 5, how do you count this three-wave structure over here, with this then being the low? Because over here we have this as a structure, second structure, and then a third structure, but this is like one candle, so it doesn't really work. But on the lower time frames, 1, 2, 3, 4, 5, this is a solid high. This high is not like really recommended. So then you have a 3, 3, and then this it doesn't feel right. It's not a proper like three-wave structure inside a zigzag 5-3 5. Besides, on Bybit it already took that low. So also lower probability, meaning the probabilities are higher that price continues to take the double bottom. Now, if we look at the CVD divergences, we had big bearish CVD divergences here at the high, lower high on price, higher high on the CVD. A lot of market longs being absorbed by limit shorts for then a push to the downside. Also here, more locally, we saw exactly the same, lower high on price, higher high on the CVD, which means absorption. Over here you can see it. This is the local range, 5-minute time frame, lower high on price, but look at the blue line over here, higher high on the CVD, which is a bearish CVD divergence, and that means that market longs are being absorbed and there is downwards pressure. So if you then finally look at the probabilities of the different scenarios in this range, then what I'm looking for is this double bottom to be taken, as mentioned basically in quite some videos, right? We're looking for this double bottom 27,160, and we have to wait and see how price reacts to this area, but also how it arrives at this particular area. I'm just below the double bottom. We have that support around 26.9, 27K, right? That's important as well. Just remember what I said. If there is no proper wave 4 before we reach the wave C target area, then the probabilities increase that we are, you could have a bounce, but the probabilities increase, you are going to find continuation to the downside. So it's important how we get here and to observe the reaction in this particular area. We definitely want to see a little bit of a range in a wave 4 before reaching this area here, else the probabilities for a C and upside are going to be lower. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.